Ladies and gentlemen of the crypto space, we're live on a Monday, April 7th at 11:36 a.m. Heck of a weekend in the futures market. Heck of a close to the week last week, Thursday and Friday. Thousands of points, double digit percent moves. The volatility is through the roof. Everyone's throwing around narratives and opinions and ideas about, oh, it's too much tariffs, it's too little tariffs. All these headlines will drive folks nuts because what do you believe? Do you believe what other people believe? Or do you see some sort of signal through the noise? Now, the first thing I do when I encounter information is I tend to think most information is useless. And I sleep on things and I let things digest. I let things mature, ferment, so to speak, maybe. And I tend to wait for some sort of like overarching high level realization. Now, sometimes those ideas come to me in the sauna. Sometimes those ideas come to me in the bathroom. Sometimes those ideas come to me while I'm working, but they're spontaneous. They're like, oh, yeah, that's right. So, my 2 cents is you're looking at noise. You're looking at NASDAQ 100. It's mostly noise because this entire two two candles of downward price action is merely a mean regression, or rather to a level of previous resistance. So what do we have thus far? We literally have a retest of previous all-time high. Thus far, from a technical standpoint, this is actually a healthy looking chart. There's no significant break in structure. It's literally just a retest of previous all-time high. In fact, that's healthy. That's the antithesis of not even a break in structure. It's just the antithesis of bad. This chart looks good. Now let's see if we have further depreciation, so on and so forth. So from right now, the vantage point right now, everything you've heard thus far is noise. Because thus far it's just a retest of previous all-time high. Now let's see, it's not even a retest yet for the S&P. I mean, first off, this is a crypto channel, so who invests in this shit? That's another story. So that's not us. But it's good to know what everyone's squawking about and talking about and freaking out about. It's literally a retest of previous all-time high. Bitcoin, you know what I say about Bitcoin? It's freaking noise also. It's all noise. Because we'll get to the idea and the realization I had over the weekend about tariffs. You'll get to that. We'll get to that opinion. But my general opinion remains that this is still just noise. Now, look, thus far, what do we have? From a monthly standpoint, we attempted to retest 2024's consolidation, just this massive horizontal price action, range bound for months on end. And we did to a degree, and we're basically sitting what looks like the monthly 10. Now the monthly, all right, fine. Let's go to week. Oh, okay. So the weekly is a little bit more constructive. So there you go. You have a bit of a retest, the wick below the 50 SMA on the weekly, and thus far, after all the insane price action last week, thus far this week, you have a giant spinning top candle that's currently above the 50 SMA. So there's nothing to take away on this chart yet. Thus far, this is the exact same conclusion or observation that we could have about NASDAQ. Just a retest of previous all-time high. In the case of Bitcoin, it was basically the range-bound experience we had in 2024. And from a moving average standpoint, everything is up and to the right, which that's what the mean regression is. You don't have a mean regression to levels. You have a mean regression to average price points. So it's a weekly 50 mean regression. Literally by definition thus far. And for NASDAQ, not quite a monthly 50. You know, I didn't hold the weekly 100. I mean, look, back in 23, you didn't have touch points on the 50. 24, you did. That was big. Touch point on the weekly 50. Didn't breach the 50, barely. Maybe a little bit of a wick tip, just a tip. And the 100, not even close. But now we breached the 100 to the downside. But there's plenty of times where you don't end up hitting a moving average for a full mean regression. Whatever. Goes down, it goes up. So the whole point is tariff talk, tariff conversation. We've talked for years about currency supply. We've talked for years about how the dollar works and how the dollar is printed. Now, there's basically two ideas that really drew my attention this week, or rather weekend, and it comes back to like Luke Gromen's ideas. Now, Luke talks about the U.S. taking on emerging market characteristics, and we would see that playing out if the 10 years started getting the interest rate started spiking, but we're not there yet. So, for instance, the tariffs keep going. The noise this morning about the 90-day pause, that's clearly noise. All headlines are noise. But if we see in the short term over the next quarter, interest rates break up to 5% and breach an all-time high or a local high, that could be confluence suggesting U.S. taking on emerging market characteristics and foreign nations selling U.S. treasuries to finance dollar demand. So we're not there yet. So what's my sentiment and what was my thought over the weekend? Kind of hinted at it in today's X posts. I think the desired goal is to some degree a global free trade agreement. And then everybody's like, what the fuck? He just threw on tariffs. Yeah, but that's the point. You want everyone to drop tariffs, period, blanket across the board, and obviously more favorable ancillary policies that allows for more free trade. Now, that would be lovely. And obviously, we have this morning's back and forth headline rhetoric between US and China. So if the whole world comes together and drops tariffs across the board, and we've seen early indications of that as a potentiality over the weekend, at least coming into Monday, still see the friction with China. But if that free trade path is on it ends up being reality, that was always the intent, was to just remind folks of the overarching economic reality that every country is in. And this is something that most don't understand. Probably the only person that understands this the best is Brent Johnson. So most people think about we have to import things, and they're talking about U.S. domestic inflation. Like, oh, it's gonna be more expensive. That's like looking. Well, not that. That's like looking at geopolitics like this. Y'all know this meme where she gets frustrated about a guy putting the wrong peg in the wrong hole. It's just like 80 IQ type stuff, which is, and she's not. I've seen her talk about this video. It's a great video because it's a great meme. So thinking about these tariffs from a U.S. price perspective is a first order inspection, which means done. It's irrelevant. It's noise. What you need to think about is the economic realities that we've discussed over the years. So we don't, when we buy so many things, fruits, vegetables, electronics, and all these things, that's what people think. That's the perspective because it's from our perspective. But to understand global finance, you got to realize your perspective is irrelevant. And what matters is sometimes taking the contrarian perspective. So we don't buy things in the US. When you go into a Best Buy and buy a washing machine, you didn't buy a washing machine. Samsung bought dollars from you using a washing machine that they manufactured. So if you take that perspective into account, the whole world is purchasing dollars from every person in the United States. That's what they're buying. They are a buyer. I know this is like, but I've talked about this. You understand? So flip the script and take on a different perspective. The whole world is buying things from us. And they get those dollars and they spend those dollars. They buy treasuries so they could do exactly what we do in Ave, so they could buy collateral and leverage it 5 to 1 or whatever the hell they do. Because you could do, under collateralized debt in meat space because they're not using Aave, they're using Eurodollar banking infrastructure. And that prints more dollars, dollar liabilities, so that they could do more manufacturing and sell more goods, or rather buy more dollars from the United States. And then that's the situation or the perspective that I think matters more. Um, so what happens when you apply a tariff? Things get are of a higher price point in the US. So yes, people and companies around the world trying to buy dollars from the US will generate more revenue, but as things cost more, that slows down velocity and the churn of goods and services in exchange for currency units. And that is not what anybody on the planet wants because the United States is the largest consumer on the planet. What the whole world needs, considering the global debt structure, is ironically an increase in US consumption because the US is the only place where foreign nations can purchase dollars. It's the market for dollars, where you go to buy dollars using goods and services. So that's a deep one, but it's something we've talked about, which means, well, talk of tariffs is noise. Every other country is being strong armed right now because the administration is threatening basically to decrease the export of dollars. And what headlines will never capture is that's basically threatening the default of the entire system. So when you hear tariffs, oh my God, it's such a orders of magnitude away from what's actually going on. If foreign nations cannot purchase the dollars they need to pay the interest on their dollar debts, and then you apply that to the depth of the dollar debts in the system and how many dollars are needed to pay those interest payments, we realize the tariffs are ultimately um, a threat to default the entire system. Every country is completely dependent on being able to purchase dollars from US consumers. So that was my realization. And that is exactly why this morning we saw what 50 nations are trying to figure shit out, including Europe. Now it's complicated. We don't fricking know the details. We certainly don't know the damn details, but whatever negotiations or arrangements are going on, they're much more sophisticated than we could possibly understand. So, one, trying to speculate on those arrangements is above our pay grade. How many people in the State Department, the ambassadors? Oh my God, you can imagine these types of conversations. And what is expressed in headlines is so far from being able to capture how complicated this geopolitical move is. How do you coordinate with 178 countries? And how do you manage that from it's a State Department level? All those communications. It's an absolute. Think about it from a Jira ticket perspective. How many goddamn phone calls and tickets have to be done? Kind of overwhelming just to start to think about. But overarching all of that um, work that has started probably today is the why that work has to be done and achieved by foreign nations. It's not that they have to comply. This isn't about, oh, he's being mean and he's forcing people to do things. This is about supply and demand. This is about not US prices. This isn't about the US consumer. This is about foreign nations and their capacity to purchase dollars from the US consumer. So the tariffs close off that market for foreign nations, so to speak. Anywho, these are some early thoughts, and this was a thought over the weekend because I always know that whatever the popular headline is, or whatever pundits or social media personalities are talking about, like, oh, there's better ways to do it. No, there's got to be something bigger and more overarching. And this was my takeaway. Foreign nations have no choice to figure it out because they need that market to be able to buy dollars. Just to remind you all, picture the most intricate spider's web you've ever thought of, that you could possibly conceive of. Every country on the planet owes every other country on the planet either quarterly or biannually dollars, coupon payments. So if I'm Canada and I issue dollar bonds and I expect other nations to pay me dollars, and the bonds are basically backed by Canadian real estate or farming or manufacturing or whatever, Canada has to come up with dollar interest payments on those bonds. So let's say it's a 5% bond and they borrow half a billion dollars. That's 5% annualized. And let's say there's quarterly interest payments. So I expect if I buy those bonds, I'm investing in Canada real estate and manufacturing. I expect Canada to pay me my dollars on my dollar bonds that I bought from Canada. Now, this example, take it to the nth degree, because every country has bought dollar bonds from every country for the last 70 years, making how many dollars in existence, virtual dollars called dollar liabilities through the euro dollar banking system, which we've discussed. But part of that system is those damn interest payments. Where are they going to get the dollars to pay those interest payments? Listen, they buy the treasuries. You think those treasuries are just sitting in a savings account? You think global reserve? Everyone throws around that fucking phrase, global reserve currency. Think it's just sitting there? No. Well, if you got a whole bunch of collateralizable shit sitting on Aave, you probably got some leverage on it. All right. In the real world, you buy in 10-year US treasuries, you're probably leveraging it 5 to 1. What does that even mean? That means you got $1 billion worth of US treasuries, you probably got $5 billion worth of dollar leverage on it. You can't just sell. It's not your treasuries. They were posted as collateral. That's why the Aave analogy is so useful for crypto folks. So all that treasury shit outstanding is in use. You can't account for the global dollar supply any other way. This, what, $36 trillion worth of US debt? How many dollars are in existence? 300 plus trillion dollars? Whatever insane number, and 10 times larger, give or take. Who knows? That's the whole point. How deep is the euro dollar market? Nobody knows. So the tariffs are a threat, a global margin call threat cut off the rest of the world's supply of dollars unless they drop all tariffs or whatever the policy goal is. And I would imagine it's unique on a country to country basis. And I won't dare speculate on that geopolitical conversation. There's no possible way to know what the actual terms are. And anyone who says certainties is offering, unfortunately, noise. You have to speak in generalizations and hypotheticals. But what I do, at least, is I certainly don't speak in certainties. I speak in terms of the structure of the system and the fundamental relationship between countries and contrarian viewpoints. Like, we're not importing shit. Other countries are literally buying dollars from us. And that, to me, is like, oh, that seems more useful in trying to understand why this current policy has legs and why it's interesting. And obviously, the most important reason why this particular perspective is interesting is because the majority is always wrong. Protesters are always wrong. There's more, something more sophisticated, something that's more encompassing to what's playing out. Right? Then fine. It's exactly the story I just told. They all need dollars. That means they all are required to meet whatever is asked of them. Otherwise, it's game over. It's the ultimate strong arm. It's the ultimate, hegemon. You either comply or you default on everything. What China does, I have no idea. I have no idea what's going to play out there, but I expect. I mean, we already saw the European Union make some talking points, which is basically like, yeah, we understand, and we're going to just do exactly what you're saying. And obviously, we already saw 50 plus nations complying to a degree in some way, shape, or form, at least starting conversation. They all will, especially the smaller nations. Larger nations have some more leverage, but in the end, China is the biggest consideration. How much leverage do they really have? And if in the end, if the administration shuts down China's access to US dollars, it defaults on all its dollar debt. And it doesn't necessarily owe the US dollars. You understand the spider's web story I said? They owe everyone dollars and they owe it to them in coupon payments on dollar debt. That's exactly how the world works. If they want to buy something internationally, they need dollars because some shit internationally is probably denominated in dollars. Someone's saying, hey, you want this shit? Pay us in dollars. All right. So that's why every country has needed dollars and gotten themselves into this situation. And then folks may be critical of the situation, but then you realize this is all by choice, all by opt in. They're like, yes, I understand. You in India wants dollars for this rice. I don't know. Come on, I'm just giving an example. And then you're like, how do I get the dollars? Because I need $1 billion to buy this rice. All right, fine. I could sell some washing machines to the United States to citizens in the U.S. and Best Buy stores to buy dollars so I could buy this rice from India. And they're like, all right, fine. We're not selling enough washing machines. We're not buying enough dollars. So let's um, let's take some of that um, excess currency we have, not dollar denominated, and convert it to dollars and buy treasury instruments so we can leverage it 5 to 1 to buy the rice. And that in turn drives up the DXY. So you can't do that too much because then the dollars get more expensive in the forex markets. So you can understand, or at least try and start to see the infinite knock-on effects. Do one thing, it causes another thing. And you see the corner that the whole planet is put in this situation. And it's not an entirely Not entirely wrong. Now, clearly it's aggressive, and clearly it's a strong arm type of approach. And we understand that there's a lot of empathy that's out there in a lot of the population. They feel bad. But in the end, do they really feel so bad if prices are high, they want prices lower. How do you get prices lower? All right, drop your tariffs outside the US. We eliminate all tariffs and prices actually come down. We have a global free trade agreement and prices actually seriously come down. And frankly, I was talking to a cousin over the weekend, young cousin in her 20s, doesn't know anything about markets. So we have this bias because we understand so much about the markets and how they work. And I always find it refreshing to talk to the younger generation. She doesn't know what's going on in the market. She doesn't understand any of it. She works, pays her bills, pays her rent. That's it. No investments, no savings, no nothing. And I'm literally saying, all right, there was a big crash. And she's like, what does crash mean? She said, oh, well, I'm like, prices could come down. Oh, stocks could get cheaper. Homes could get cheaper. Oh, your eggs could get cheaper. Shit in the grocery stores could get cheaper. Shit in Best Buy could get cheaper because, there's a big crash. And she's like, it sounds pretty good. And then I'm like, I understand. I'm saying to myself, I understand. So we got a demographic or a generational rift. On social media, we see, oh my God, it's a crash. Everyone you're hearing that has a negative opinion of a crash is literally people that are not part of the next generation. They're not in their 20s and they're not in their 30s. These are just a biased perspective of folks that already own shit. For the teenagers, the 20-year-olds, and the 30-year-olds that know none of this insane world that us increasingly older people have created would be very relieved if the price of things came down significantly. Oh, a real estate crash. $800,000 homes are now selling at $300,000. Oh my God. They would be like, oh, thank God. They would be overjoyed, excited, happy, relieved. So it's so important to understand perspective, just like the perspective I offered about international dollar demand. It's the same thing. So perspective matters. So maybe, the little silo or the little bubble echo chamber we listen to on social media is interesting. It's always interesting to hear folks say, oh my God, he's causing a financial catastrophe. That every 20 and 30-year-old are like, thank fucking God. Because there's no way a 20 and 30-year-old is able to buy an $800,000 home, but they have a chance at a $300,000 home. So that bubble on social media will drive you freaking nuts. As an investor, you're like, "Crap, should sell everything." All right. So fortunately, for the last couple of years, I've talked about a different methodology. I don't give a shit about a crash. I judge my behavior based on three rules. And then everything else there's nothing I could do about it. Everything else is serenity. Go look up the serenity prayer. That's it. I remind you, rule number one, own more assets. Rule number two, know when to stop buying assets. Rule number three, fuck you, pay me is the qualification, primary qualification for an asset. Rule number one, warrants. Buy assets as cheap as possible. Rule number two, warrants. An understanding of geopolitics to a degree, but certainly global macroeconomics. Gotta know when shit is at a premium versus when shit is at a discount. You don't want to buy things at a premium. You want to buy things at a discount. Just to give full transparency, my 2 cents on where I am, I spent the last 3 years since 2022 buying assets. I own more than enough assets. My portfolio, total net worth, absolutely taken to the woodshed, chewed out, right through the wood chipper. What's pertinent? Rule number two has been engaged. Things are not necessarily at a premium nor a discount, but I have enough exposure. I own enough assets. I know where the market will be in 10 years from now. So for me, rule number two is engaged because I executed rule number one and I bought assets. And at some point in time, rule number two will not be engaged and I will choose to acquire more assets. All things considered, just follow the rules. You follow the rules, everything is noise. And you judge your performance based on, all right, I know I got to buy assets. I probably should stop buying assets depending on whether shit is good or bad or volatile or not volatile or whether I understand what's going on or not. So there's your rule number two. And I have the qualification for what is a good asset, something that pays me and is at a discount. And that's it. And just because something is available that pays you and is at a discount doesn't imply you have to do anything. You don't have to do anything. You have to respect your portfolio balance, for instance. And maybe you already have exposure. So that's a whole nother conversation. The concept of exposure. We were talking about that on Discord in brief over the weekend. And I'm like, I don't care if something's necessarily cheap. I already have all the exposure I need. We haven't seen the monetization of this space yet. I have my exposure to Sonic. I have my exposure to Arbitrum that's been absolutely dismantled. Speaking of dismantled, Mantle, fucking Mantle. That's probably the only exposure I have that I'm like, yeah, no. If it was a liquid position in Cleopatra, I would have liquidated it. But I'm encouraged to not give a shit because it requires work and I'm a lazy son of a bitch. So I would say Mantle, at least in my opinion, has experienced narrative invalidation. I'm quite I'm quite I have a good sentiment regarding Linnea. So that is not invalidated. That still has the attached consensus narrative. And even Arbitrum. Look, Arbitrum has been beaten up just as bad as Mantle. Obviously Mantle worse, but the point is, how could you not have Arbitrum exposure? Arbitrum and Optimism as the original L2s of Ethereum mainnet. So that is a very strong narrative that I simply cannot invalidate, at least thus far. It's a big narrative. So that's how I operate. I look for things to invalidate a narrative, and unless it's like some serious considerations and serious observations, the original narrative is still there, which implies there's nothing to do. Just the market is going to do what it's going to do. Your original thesis for acquiring exposure to something is not invalidated. That means you just let the market decide what your total net worth is. And the market will sure as hell tell you. The market loves to tell you whether you make good choices or bad choices. And that helps you make good choices in the future, or at least better choices over time. Anywho, ladies and gentlemen, what do I have up on the screen? I have this image. Anything else interesting? Obviously, our stream. Mean regressions thus far. I see mostly noise. I'd be curious to see the Fed's meeting today. Now, folks, look into these things too much. What I would find interesting, what my two things that I would find most interesting. I'm interested in what comes out of England. I mentioned over the weekend the reach of the crown, and it is massive. The amount of influence and power and control the crown has is enormous. So I'm definitely interested there. I'm interested in what the Fed says because if the Fed says swap lines are not available, that confirms a thesis that I have. I think that will significantly strengthen the strong arm approach of the administration to get the deal that they're looking for. Because if the world cannot access dollars vis-a-vis swap lines in case of a liquidity emergency, that's going to scare the shit out of people. And that means everything. So right now, what's going on is a whole lot of noise, whole lot of volatility, but for myself, nothing has changed. Hope that helps. All right, let's do some commentary because I also have work I got to do. So, Critical Mass Jim here, DA advisor in the house. Athletic Concept, sir, yes, sir. Happy Monday, Mix, George. Good morning, guys. Arrow, are you looking at coins with relative strength or not paying attention to coins at all? Now, I spent the last 3 years. We spent the last 3 years, Arrow, buying shit. I'm not going to sit here questioning myself. I know damn well all that time and energy I spent over the last 3 years was well spent. I know damn well I have all the exposure I need. I know damn well the total net worth means shit. I know the market will tell me my total net worth, and I have no control over it because that's the way I choose to engage with markets. So I'm not looking at anything. I'm looking at the dollar, just freaking ripping right now at 103.5, and move. So we are in a bit of a liquidity event. People are spooked. The odds are everything rolls over until we have a little bit more clarity on the market. And I certainly don't have an interest in trying to adjust the portfolio at a time like this. You know when I want to adjust the portfolio, my friend? When everything is absolutely euphoric and parabolic. And then we could judge relative performance much more meaningfully. Not when everything's suffering, but when everything is being monetized and the winners are being chosen. Because we know we're supposed to sell the losers and buy the winners. That's when I will be more interested in adjusting the portfolio. Yo, Tim, evening cap. Mid-show, my friend, speaking of work, yes, indeed, we are in very interesting times. Either it's still binary, it's still very binary. Either the strong arm approach works or it doesn't. Either either they get the interest rates down and everyone capitulates, or what Lou Groman talks about plays out, and that could be scary. But in the end, you can't bet on the end of the world, which means Luke is very smart. One of the best macroeconomists, in my opinion. There's no invalidation of what he talks about. What he has is a thesis, and the reality is it's binary. Either that plays out, and we start to see 10-year yields keep going, climbing, 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 and everyone somehow is selling their treasury instruments, even though they're leveraged through the roof, or every country capitulates and we have an absolute monetary velocity explosion because tariffs go to zero across a good part of the planet. And that's going to take some time to really iron out the details. But we'll be looking at the data, and that's a daily inspection. We don't even have early indications of where the hell things are going. Well, what we have is the captain sitting in a sauna and on the toilet over the weekend, realizing what the actual situation is. We just figured out the situation. We don't know how it's playing out very much at all yet. That will take time. Yo, Tam, Sir Joe, President accounted for. I choose Contango as arbitrum exposure over Ramses. The latter didn't adhere to rule number 3. Yeah, Ramses is absolutely collapsing. That is meaningful. Um, Still in the speculative sentiment regarding um, rule number 3. It reminds me of like Frax doesn't pay shit. Arbitrum does what everyone thinks it's going to do. It doesn't matter what exchange you have exposure to. Number 3 will reinflate as well. All right. In the end, I'm sure you'll agree, Arbitrum offering exposure to Sonic the way it did was a wonderful outcome, even if exposure to Ramses is not retained. Um, there's certainly no, you know, exact way to make these decisions. You made that choice. That's fine. I make my choice. Guess what? In 5 years' time, we look back and we have 2020 hindsight, and that's when you compare. You can only compare in hindsight. You can only measure everything from a hindsight perspective, and that's it. So the best thing I could say to your post is that is a reasonable choice. And the most important thing that we always do is what is reasonable. There must at least be a logic to any choice that is made. Yields going up as assets selling off is interesting. Man, between the dollar, the move, and yields, oh dear, this is going to be a precarious week filled with all sorts of unknowns. And the former is multi-chain and paying over 100% APR each epoch. Is it back to 100% APR? Maybe good to rotate. So that is a consideration. Anything that I do is absolutely slow and methodical. I have absolutely no interest in doing anything knee jerk. Why? Because I used to do things knee jerk, and that was when I was younger. And the only conclusion possible is that was the wrong behavior. So now everything should be extremely slow and methodical. If anything, that is consistent with what Warren Buffett has taught us over the years: slow and methodical. Mark the Fed wants to stand still while the neutral rate rises on expectations of inflation. Expectations are doing them a favor, so they don't have to do anything. Yeah, I'm not interested in Fed cuts. I really want to see 10-year yields come down. Right now they're going up, so that is the wrong direction for the happy path to crypto performance. I'm more interested to see if there's any announcement regarding other Fed policies, like swap lines, for instance, to see if they're going to reinforce the administration's strong arm approach to geopolitical policy at the moment. Can you explain more about why anyone should care about England? Because England owns or controls a good part of the entire planet. Most are unaware, as this is a common theme. Most are unaware of the nature of global economics. Most are unaware of second order and third order policy considerations. Everyone's like tariffs and the price of goods go up, but that's the noise. What's more meaningful is the structure of the global currency supply and debt interest payment obligations of the entire planet as part of the Eurodollar spider's web. So England, particularly the crown, basically controls 40s, 56, 66, 73 nations. And that is just a very not often talked about reality. Does anyone find it interesting that what happened in Canada when Trudeau stepped down, there was no election? There was basically an installation. I think that's been mentioned a little bit on social media, but it turns out that King Charles is the head of state of Canada, the head of state of New Zealand, the head of state of Jamaica. Now, yeah, general public will be like, oh, that's just a pretty fancy title. Okay. So this is probably the only public facing. All right. Let me do a quick story and I think we'll bring it to an end. Um, Everyone talks about the billionaires and this whole thing going on with the oligarchs in America, the billionaires. To me, there's an overarching power structure on the planet, which isn't billionaires. Billionaires is paltry in comparison. What I'm more interested is the legacy trillionaire families, price adjusted, of course. So what are those? What families would those be? It's the families, the big families over the years. Probably not, probably the Rothschilds to a degree, but obviously the crown in England. What are the remnants of um, the legacy out of old Russia, or Think of these big particular frameworks that I'm trying to express using words, like descendants of Genghis Khan, I don't know, that still have descendants that have control over territory and economic regimes and political influence. So people talk about the billionaires, they're like, oh, net worth. Net worth is meaningless. What matters is political currency, influence. If you have $5,000 in your bank account, but you have influence over $1 trillion economy, all right, that means a lot more because you could surely get some income if you wanted to. So the point is, political influence and economic influence is a much less quantifiable measure. So I find that much more compelling. This is obviously a thought experiment. It's not like Forbes 100 or whatever, and how much these folks have in a bank account. Meanwhile, that's not what those numbers actually mean when you truly understand capital management and like whatever. One number we do know is how much people say how much money Buffett has, and they have 300 and what $60 billion. No, he doesn't. He's got a whole bunch of freaking money in T bills. He owns T bills. There's no dollars there. It's T bills. Fine, it's a cash equivalent, but that's not the point. The point is there's details and nuances that matter. So I find it interesting, this overarching umbrella of the multi-trillionaire families, these old names and these old regimes that carry this political and economic influence that basically governs the planet. The crown happens to be probably the most public facing of them, given that this is literally public information. 73 nations that are basically pretty much under strong influence from England and the crown. Hope that helps. Mark, was a typo trying to ask a question while driving via speech text. You asked, yield going up. Yeah, but it was a good question. Oh, Mark, the markets, the Fed wants to stand. Yeah, don't drive yourself nuts, guys. Sit in a sauna, serenity, you know, try and block out the noise and just let the markets do what they're going to do. What do you have control over? What do you not have control over? And be wise enough to know the difference. VIX nearing 2020. Yeah, shit's getting hot, my man. There's some spicy shit going on. Got the VIX down here. 10% up at 50. 1035. I mean, thus far, DXY is yet another 200 SMA retest. Absolutely wild because that is a big ass wick to the downside. That's a massive wick to the downside. So we are not game on until this breaks down, move breaks down, and 10-year yields break down. So we have literally just reversed in the wrong direction, ladies and gentlemen. Is that what Buffett has been waiting for? Buffett literally follows the rules. Rule number one, rule number two, and rule number three. And most of what I talk about with regard to those rules is probably keeping Buffett in mind. Boy wants to own things. He's going to buy them at a discount. He wants to do hostile takeovers. He wants to wait for someone trying to do bankruptcy, someone falling apart, and he swoops in and buys their debt at 10 cents on the dollar and absorbs the company. Hostile takeover meaning whatever strong arm that he could apply to acquire a company at a significant discount to fair market value. That's it. Unless he sees a discount, he has the ultimate patience. And that's just generally what Berkshire Hathaway is known for. And he probably has said recently that he probably should have adjusted a little bit, considering macroeconomic trends and the way the economics have adjusted over the years. But his methodology is still rock solid. Own more assets. And if it's my methodology, own more assets, know when to stop buying assets and wait for a damn discount and make sure that shit is a healthy company that pays you. Value investing 101, balance sheet inspection, and that's why the crypto markets remain probably the best landscape because from a balance sheet standpoint, these are the best value investments on the planet. Hope that helps. Killis, good morning. Yes, indeed. All right, let's wrap it up for today. I got to get back to work because the day job. Never quit your day job. Ever. Never do it. Monday, April 7th, 12:26 p.m. I thank you all for joining me today. 415 people made it to the end of the stream, and you are all now a little bit more rational because of it. It is only Monday, so we get to see what other Saturday is in store for us for the rest of the week. Keep your head on the swivel, but also keep your head nice, cool, calm, and collected. Serenity. Go with the serenity prayer and do yourself a favor and block out the noise and focus on the signal and just relax. Let the market do what it's going to do. And that's it. Try and woosah. Take up meditation. Sit in a sauna. It's more important. Until next time. See you later, my friends. Peace.